Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Tuesday, December 6th, 2022. Before I jump into the charts, please click like if you would each and every time you watch the daily Apple report, as well as the daily Tesla report. We put them out every day, as you might expect. Also, subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded, and that's each and every day for both the daily Apple and Tesla report. And if you would, pass the share, if you will, the video with friends and colleagues. It's free. So let's take a look at the charts. We did push through this trend-defining descending two-thirds speed line projected off the August high today at 149.30. We did push through it on Monday, certainly didn't close above it, and we also closed negative on the day. So this essentially affirms the fact that this is a meaningful price ceiling. We've come close to testing it or have tested it outright a number of times since the October high, and below which, holding below 149.30, we can unravel by the end of January to 123.83. Now, of course, there'd be meaningful sell signals on the way down, the most notable of which is 139.32. And that is shown here, a new descending channel bottom based in part on Monday's high. And 139.32, I don't expect to see that today, but we may well reach it over the next few days. Downside today, 143.47, not illustrated anywhere, is a soft intraday support level. We are trading above it presently in the 146 handle. It can contain intraday possibly daily selling pressures. So I put that out there. I'm reluctant to call it session containment because we just came off 149.30 longer term resistance, and we closed negative on the day. I don't really want to encourage aggressive buying at 143.47, but quite honestly, if you are an aggressive day trader, you can have at 143.47. We can bounce nicely off this level. I don't know if we can bounce all the way back to 149.30 intraday. We might, but I also say that if we break or open below 143.47, the 139.32 formation is attainable. That would be quite a sell-off today, but we've seen them before on this chart, so it is in reach. 139.32, if tested today, can contain selling into later, possibly the balance of the week. From 139.32, we can round back up short term to the 149.30 descending two-thirds speed line once again, where we can top out through December, even through January, and below which 123.83 is in reach by the end of January. And on that score, I will say that a settlement today, which I don't expect, but perhaps by the end of the week, below the 139.32 formation should add weight to the market. Follow through selling then possibly in as little as 2 to 3 weeks, 123.83, a long-term support level at 123.83. On the weekly chart, you can see it at 123.74, the start of a narrowing zone down to 118.87 that can absorb selling not only through the first quarter of next year, but even into later 23 as we can come off of this nicely for months to follow. Let's talk upside today. That if we do, now we have all these minor points, and they're all legitimate, carefully chosen points. I'm not suggesting that they're going to hold significantly, but of all the points that I see in the neighboring area, these are those that you can trade if you're an aggressive day trader. The 2 points to trade or 3 points to trade if you're sort of the trade of the day is 143.47 downside, 149.30 upside, and 143.47 downside, 139.32 downside. So breaking 43.47, 39.32 attainable, holding above 143.47, 149.30 in reach. Just so you know, a WickedStocks.com membership delivers regular daily video analysis in the SPY and Triple Q, weekly video analysis in the S&P 500 index, the NASDAQ 100 index, and a U.S. Treasury ETF, and 2 individual stock pick videos every week. Check out our other content by clicking the link below. So if we do happen to close above 149.30, and I'm just repeating myself here, but I'm going to again, 149.30. Okay, descending two-thirds speed line, pretty classic long-term resistance. Closing above it does signal longer-term bullish continuation, but we have a horizontal channel structure at 157.52 that may contain those buying pressures. In other words, we could get the 149.30 buy signal, and I think that that's actually a good 3 to 5 day buy signal up to 157.52. Do I think it's a good 2 to 3 month buy signal up to 180.35? I'm not, keen on emphasizing that. For me, I think the safer approach in terms of playing the long side in Apple, if you're more of the 2 to 3 week, 3 to 5 week trader, would be a settlement above 157.52. And then I think we're well on our way. Like if we were to close the end of this week above 157.52, I think by the end of January we'll reach 180.35, which is a significant longer term channel top that coincides with the highs from earlier in the year that can absorb quarterly buying pressures when tested. But right now, as I've been saying now for weeks, we are heavy into January below 149.30. We can fall into the 120s over the next month or two below 149.30. And I really don't have a buy signal into January unless we close above 157.52. And then I think by the end of January, 180.35 should be anticipated. Inside the 149.30 to 157.52 region is what I call kind of the no man's land of longer term trend identification. But I think it's a good 3 to 5 day play. So if you're a swing trader, closing above 149.30, I think you can expect 157.52 probably by Friday's close, where we could top out through the rest of December and if settled above, would signal longer-term bullish continuation. I don't think there's really anything else to say beyond what I have. Anything beyond that would be repetitious. So I'm going to leave it at that for Tuesday's Daily Apple Report. Please click like and subscribe if you haven't already. I'll be back tomorrow with Wednesday's Apple Report. You have a great day.